All right, let's bring in Alan Nuckman, who's joining us this morning, Chief Market Strategist at BullseyeOption.com. All right, Alan, so you're not ready to dip your toes into the mess of content of AT&T just yet, but you are into dividends, sir. Are you not, Mr. Nuckman?
No, I'm an options trader. So as far as dividends go, I hold options instead of the stock, so I don't get the dividends. But I understand the angle there, and there are some good plays. The AT&T is a great example. It had a big move last year, and I know we jumped on some of that. But since that time, it's kind of relaxed.
That's right. Yeah, you did have AT&T in the mix for a little bit. Oracle's a dividend stock, but the flow is kind of what I have in mind here. Even if you're trading the options, you're not getting the dividend. You can chase dividend payers that are attracting some of the money flows right now.
Right. There will be people that are attracted to the stock itself because of that fact. So
yeah.
It helps because I follow smart money buyers, and I follow the people that are somewhat in the know, and they think this stock is probably a go here. Well,
that's why we follow you. You're the fish swimming, around in the wake of the bigger fish, and we're the tiny little minnows swimming behind you, Alan.
It's all the food chain.
Don't lead us astray.
Are in the food chain. Looking at Oracle, Oracle's been between 70 and 90 here in 2022. So it's right now at this 80 midpoint. So that's pretty important. So that looks like it could chase to that top of the range. And if it breaks out of this $20 range, that target's 110. Let's remember this stock was at 100 in December, so it was 25% off its top. And in the big picture, the overall move from 40 to 100 has a midpoint at 70, which is a super support level. Now, looking at the macro market, because I know you try and ignore that in every one of our segments, the macro market, the S&P right now is at a critical weekly level. 4450 is the halfway point of that drop from the top. So we had moved above it. Now stocks have stalled. They need some sort of catalyst. We've got earnings season ahead. That could be a good start. But I'm looking for the macro market to make another secondary move after this consolidation. And I think all the stocks will benefit, but especially tech that's had a little bit of a tough time in the last week.
Okay, and so maybe time to take a little bit of a shot. Alan, how will you know when it's just too relentless of a market, maybe in bonds? It seems like that's kind of what's connected into this tech situation. I mean, do you keep taking stabs even if the pressure is there? Or at what point do you cave and you say, okay, I need to give this time for the dust to settle in some of these tech names?
Yes, I will keep taking stabs, but the risk reward favors the bulls is something that you've got to realize. Now, I know you want to talk about rates. You look at the Eurodollar futures. Eurodollar futures are telling us that we're going to raise 2% in the course of this year. Now, how we get there is going to be the mystery. Okay, it's going to be 50 here, 25 here, 50 here. But then we're going to raise another half in the next year, so in 2023. And that's the end of it. That's the end. So that's 2.5%. We're at 0.25% right now. So that all of that brings us to 2.75%. I'm not afraid of 2.75%. All right. That's not going to bring the markets to a screeching halt. So let's get back to this Oracle play.
Okay.
The way I'm going to play Oracle, July option, a July 70 call, that super support level is trading for about, $12.25 now. It's now $10.50 in the money. So the expiration break even is about $1.50 higher. I'm going a little bit deeper in the money than I usually am because I'm not buying that much time. I'm buying 3 months. The September option looked to be a little bit prohibitive, so I went with July. So I'm going, instead of buying 5 months at a time, I'm buying 3 months at a time, but I'm going a little deeper so that it's going to give me a better payoff on the upside. And if this stock gets up to the 90, just very conservatively, gets to the top end of this range at 90, that option will gain 50%. You've got to be happy with a 50% return, limited risk, plenty of time, and being long from that super support level.
So it seems one of the things that you've adapted a little bit here, Alan, is the degree to which you're going in the money. $10 on an $80 stock. So you're conscious of the pressure in this sector and therefore giving yourself a little bit more wiggle room. It seems like compared to some of your other trades where you might buy something that's a little bit closer to in the money, but still always generally in the money.
Right. There's always a balance. There's a balance between time and being in your degree that you're in the money. Typically, I start at 70%. And ideally, I want to have a 70% delta, and I want to have at least 6 months time. Now, if I can't get the 6 months time, maybe I'll go a little bit further in the money. I balance it out. So it's all about the math, and that's my stock substitution strategy that's been successful. You can look at some of the charts. Look at BMY. We talked about that weeks ago. We talked about Valet weeks ago. And even 2 weeks ago, we talked about GILD. GILD had a big bounce off that bottom. So, again, it's trying to set yourself.
Hey, that's why you're here.
The right strategy.
That's we keep bringing it back, Alan. You keep keep hitting them. All right. Gilead at BMY, two very nice ones. Hey, actually, Oracle too, holding up here even as the market makes lows. So I like that you're targeting a tech stock that doesn't fit some of the worst performing categories for sure.
And the key is time. I don't have to be precise. I can just look and see what happens over the next 3 months. It's set up for a bullish. I have a bullish bias over the next 3 months. It's that simple.
Okay, all right. Thanks, Alan. Appreciate it. Nice combo. Appreciate you dancing around with us a little bit this morning and talking outside the trade, too. A little macro thought from Mr. Nuckman on rates and deep in the money option, a call in Oracle.